How do my credit scores impact mortgage rates in 2025? And what has changed this year? Today, I'm talking about a really important topic if you're planning to buy a home or refinance: your credit scores. Hi there, my name is Luna Petty. I'm a mortgage broker with Unique Financial. By the end of this video, you'll understand why your credit score matters, you'll understand what's new in the mortgage rate and credit score relationship, and most importantly, how to use this knowledge to save money on your home loan. Let's start with the basics. Think of your credit score as your financial report card. It's a number between 300 and 850 that shows how reliable you are at managing money and paying back loans. The higher your credit score, the better it looks to lenders, banks, or mortgage companies. When it comes to getting a mortgage, your credit score plays two big roles. First, it determines whether or not you can even qualify to get a loan. And second, and just as important, it affects your interest rate. Interest is the fee that you pay to borrow the money, and it's added to your monthly mortgage payments. The better your credit score, the lower your interest rate, which means the more money you save. So, what's new in 2025? There have been some changes that make your credit score even more important than before. First one, the credit score cutoff for the best rates has shifted. In the past, a credit score of 700 might have gotten you a great rate, but now you might need a 720 or even a 740 to get those same rates. This means even small improvements to your score could make a big difference. Another change is how lower credit scores are affecting rates. In 2025, the difference between rates of someone with a high score and someone with a low score has grown. For example, if your score is 620 or below, you can pay up to 1% more interest than someone with a 740 or higher. Over a 30-year loan, that could add up to tens of thousands of dollars. More good news for buyers everywhere. Many lenders are offering more flexibility for first-time home buyers. If your credit score isn't perfect, but you have other strengths, like you have steady income or you have a bigger down payment, then you might still qualify for a competitive interest rate. Now, if your credit score isn't where you want it to be, don't worry. There are simple steps that you can take to improve it. Paying your bills on time is the most important thing that you can do. Late payments obviously hurt your credit score, but we also have so much technology available, just use it. Set reminders or automate your payments if you can. Another tip is to lower your credit card balances. Lenders like to see that you're using less than 30% of your credit limit. For example, if your credit card has a limit of $1,000, try to keep your balances under $300. It's also good to check your credit report for mistakes. Errors can happen, and fixing them can give your credit score a quick boost. Finally, avoid opening new credit accounts unless you really need them. Every time that you apply for credit, it can actually temporarily lower your credit score. So, why does all this even matter for your mortgage? Well, let's say you're applying for a $300,000 home loan. If your credit score is, say, 620, then versus that 760, the difference in the interest that you could qualify for could mean paying about $200 more each month. And that is around $72,000 over the life of a 30-year loan. That's a huge difference, and it's all based on your credit score. Now that you know how your credit impacts your mortgage rates and what's changed in 2025, you're better prepared to make smart financial decisions. If you're thinking about buying a home or refinancing, take a moment to check your credit score and see where you stand. If you have any questions or you want to explore your mortgage options, I'm always here to help. Reach out to me and using any of my contact information, and let's talk about how we can make your homeownership dreams a reality. Thanks for watching.